everybody. Welcome to the Black Financial Channel. I hope you guys are doing well. I'm Dr. Boyce Watkins from Your Black World and the Black Business School. And I am going to quickly say hello to you guys first and foremost, and also give you guys a little bit of financial discussion today on the Black Financial Channel. I also want to say hello to everybody on my Financial Juneteenth with Dr. Boyce Facebook page. If you could share this to your page, I would really appreciate it. We know that financial intelligence is important for our community. It's one of the most important things we could have. So the best thing you can do for your people is to encourage them to be a little bit smarter about everything that we do as human beings. All right. So anyway, I hope you guys are having a good day. And I thought that I would kind of give you a quick breakdown of what I see as a financial guy. Hello, Larry Hurt. How are you? On a report I just saw, according to Bloomberg, 42% of family offices, of wealthy family offices, are basically stocking up on cash reserves. Right now, they're moving out of stocks, they're moving out of bonds, they're moving out of real estate, and they are basically pushing their money toward just straight cash. And cash is kind of this thing where you're when you sort of do that if you're wealthy, when you don't think that the other asset classes are reliable investment vehicles, or you see a lot of downside. You see more downside than upside. So the feeling, the sentiment right now amongst wealthy people is that they think a recession's coming. They kind of think that we're going to hit a downturn pretty soon, that the stock market could easily pop, or that the price earnings ratios are too high right now. Stocks are trading higher than they should be, and that could be an issue. And so anyway, before I move forward, I want to say hi to everybody. Feel free to shout out your city. I'll shout your names real quick. I see Nakia and Amanda and Robert. How are you? From Houston, Texas, driving. You're in Maryland, driving the big truck, my friend. Good for you, brother. Good for you. James Simmons, see you in NYC. Yes, I'm going to be in New York City conducting a financial Juneteenth investment seminar. It's going to be day long, me and you in a small group. If you want to come along and you want to be a part of this group, it's not a very big room in terms of number of people that'll be there. Feel free to go to drboycenewyork.com. That's drboycenewyork.com. And also, as a special favor for you guys that are here, we have about 30 more discount tickets left. If you want to get a discounted pass, 50% off, use the code word New York. All is one word, NEWYORK, in the promo code, and you can get half off any pass that you want to use. So the goal is not to make a ton of money. The goal is to make sure we can pay our expenses. So if you'd like to come along, we guarantee that you're going to learn more in that day than you probably learned in the last 2, 3, 4, 5 years. And if you don't feel that way, then just let us know. We'll give you a refund. But we never have to give refunds because everybody loves our seminars that much. So feel free to go to drboycenewyork.com. Amanda Wiggins, let's see, I saw James, John Floyd, 6. Let's see, does it mean that if stocks EP earnings per share is lower than its dividend yield? What does it mean? Oh, what does it mean if the earnings per share is lower than its dividend yield? I don't think it means anything necessarily. It just, because there are some stocks that pay high dividends, some stocks pay low dividends. It has more to do with the type of stock you're looking at. You have some stocks that are cash cows that have a lot of extra money, so they pay more dividends. And then you have stocks that are smaller companies that need that money for growth. The same way a baby needs extra food when he's really growing. Well, companies need extra cash to fuel their growth. So if you want to learn more about that stuff, I actually have a really good investment class that we teach in the Black Business School. A lot of people love that as well. You can go to theblackstockmarketprogram.com, theblackstockmarketprogram.com. Stock market investing is my expertise. That's what I wrote my dissertation on at the Ohio State University. So you can feel free to go check that out. It's actually online. You can go read it if you want to. Kathy Solomon, how are you? Nakia Clark, good to see you. She came to one of our seminars, if I'm not mistaken. Yeah. Larry Hurt, I'm running into the stock market, about to get into real estate next. Yeah, there are 3 major pillars of wealth that we teach in the Black Business School. There's stock market investing, there's real estate investing, and then there's entrepreneurship. And I recommend that those are the 3 things you make sure your children understand before they go to college. That's more important than college, actually, more important than college. College is important, but understanding wealth is more important than any class they'll take in college. So I recommend that you put your children in business school while they're young. We have a Black Business School for Children. If you want to go take a look at that, it's blackmillionairesoftomorrow.com. It's a great program. Again, everything is a money back guarantee if you're not happy, so there's no risk to you whatsoever, but feel free to check that out. David K. in London, England, good to see you. We were in London not too long ago. We actually created the Black London Asset Acquisition Council, which is basically an investment club in London, BLAAC, get it, Asset Acquisition Council, Black, get it. Anyway, that group has taken off, and they are meeting on WhatsApp and texting each each other back and forth, and we just facilitated bringing them together. And we're going to do that in other cities. We're just trying to do it slowly but carefully to make sure that we're serving you the best that we can. So here's more information in the story in Bloomberg, which you can feel free to go read as well. Basically, what they're saying is that the world's richest families are starting to get a little skittish on the future of the economy. Let's see, they're basically, you know what, crap, this thing is not showing up. I have Bloomberg on my phone, but not on my freaking on the computer. They're not letting me they're not letting me read the article. So what I'm gonna do is dig it up here because I think it's worth looking at. Effectively, you know, what's really happening now is that cash isn't the only thing wealthy people are stockpiling up. They're also stockpiling gold. People tend to stockpile gold when they think the economy is going to go south, or when they think countries, you know, gold is a little bit better than, say, cash, because gold, you know, is a scarce commodity, right? And you know, one of the ways I invest in gold is I don't buy gold bars and stuff like that. They have exchange traded funds you can buy to get gold. I think the ticker symbol is GLD. So I just buy some GLD and put it in the portfolio. Do I think that the market's going to go south? There are some indicators that say it's going to, you know, possibly have a downturn. But this idea that the market is just too high, I think you got to be cautious about that, because, you know, the market's always continued on an upward trend for a long time. A lot of people look at the price earnings ratio, the ratio of the prices to the actual earnings of the company, to determine how much you're paying for the right to a particular amount of earnings. Meaning, if you buy stock, that's what you're buying. You're buying the right to a percentage of their cash flow, a percentage of their earnings. So you may pay this much for this much in earnings, or you may pay that much for that much in earnings, right? And so now the market is trading I think a pretty high ratio, which is making people think that it's a bubble that could burst, because perhaps the prices are a little bit high for the amount of money that's being actually earned from these companies. So give me 1 second, hit the thumbs up button, or share this to your page while I do this real quick. Hit the thumbs up button and that notification bell. Hit the notification bell and let me know that you hit the notification bell, because that's important for you guys getting notified when we go live. So please do that real quick while I look this up. Okay, give me a second here. I thought I could get the article up on my computer. I pulled it up. I didn't know that they were going to cut me off, though. All right, here we go. Let's see if I can get it here. Here we go. Let's see if Bloomberg will do me right on my phone. There we go. Look at that. If there's a will, there's a way. The head of the Stone family office said he doubts. This is Rick Stone, a former partner at Caldwell, Wickersham, and Taft, sees treacherous times ahead for family offices trying to deploy cash. Now, pay attention now. Wealthy families have like an entire office that manages their wealth. And the thing about being a wealthy family is that you have to think of your family like a corporation. You know, you want to get your family, you know, have your family business or your family wealth kind of incorporated, even if it's not that much money. Just thinking a certain way opens the door for wealth, right? Like, I think of my family as sort of this, you know, like the Rothschilds or something. We don't have Rothschild money yet, but, you know, you have to sort of think that way to sort of head in that direction. So we're you know, we meet with lawyers and accountants and financial advisors to make sure everything's packaged and taken care of in the right way, because the thing is that once these families get all this money, they have to protect that wealth, you know, protect it from lawsuits, protect it from, you know, market downturns, protect it from irresponsibility. So, you know, a lot of wealthy families actually have offices, or they'll have a team that's responsible for making sure that the wealth is protected. Why do they do that? Well, because when you have your money right, then you get to live a more purposeful life. You know, you get to do what you want. You can sit at home and paint art all day, or you can sleep in, or you can go on vacation, or you can go do charity work, because you don't have to worry about money. Money's not a factor anymore. And so anyway, the head of the Stone family office said he doubts the bond market will provide any real return over the next decade. The equity markets will suffer a substantial drop and then be flat, and that too much venture capital and private equity money will continue to chase too few opportunities. So what he's basically referring to are the three major pillars, or three, it looks like, I want to say, he wasn't talking about all the pillars of wealth. He didn't mention real estate, but basically he said that he believes bond markets won't provide much return, which I agree with. If you follow any of this, basically the bond market has been acting real weird. The yields are actually negative, which says that the prices are just super, super high. Also, he believes that the stock market's going to drop and then go flat. He's just speculating, though. Nobody really knows that for sure. The stock market, from what I understand, has not done that for a really long time. It did it during the Great Depression, but even that was temporary. But he says that too much venture capital and private equity money will continue to chase too few opportunities. The reason I think you have an advantage as a Black person, many of you that come here are Black. You don't have to be Black to be here. Just know Black people are my top priority. I don't honestly think about other communities that much, but other people do come in who are white and Asian, and they learn from us too. But if you're Black, just know that, Black, like, I just put Black first. That's just how I think. Basically, I think you have an advantage because you have a lot of really good investing opportunities right there in your community. There are lots of really good ideas. Black people are the most creative people in the world, and we work harder than anybody else. So we got a lot of really good entrepreneurial ideas that can be started with just a few $1,000s. So one of the things that we're doing at the investment summits and seminars that we have, we're going to have one in New York on October 27th, is we are going to have what I call the elevator pitch competition. And then the elevator pitch competition, you can go up there, pitch your business, let everybody know what you got going on, give it about 90 seconds. That's all I'm going to give. That's the only amount of time you have, because that's the amount of time you should take to tell people about your business. And then everybody who's in there, these people are not normal people. These are people who invested in themselves in order to be there. They spend money to buy a pass. So many of them have, a few $1,000s in their bank accounts that they're looking to invest to make money from. Maybe they want to make a friend and connect with somebody that can help them turn their 5,000 into 10,000 or whatever. And these are the individuals that can come in and help you get a little bit of that early cash flow that you need. But we'll also talk about the standards and that you must maintain in order for those business deals to actually make sense and for those business deals to be secure. Okay, so that's what we kind of cover in our investment seminars. Again, if you want to come to New York, just go to drboycenewyork.com. Let's see. He says he says it's very hard for family offices to allocate money. So he's basically saying that we've got this money and we don't know what to do with it. We don't know how to deploy this money because we don't feel good about what we're seeing in terms of opportunities to make this money grow. If you have money, the game is you're always looking for avenues and venues to make your money grow. You're looking for investment vehicles. That's what they're referred to. And basically they're saying the investment vehicles aren't very good. So we're just going to sit there, let our money sit, hold back. And what they're waiting for also is they're waiting for the recession. See, everybody thinks a recession is always bad. Everybody thinks a downturn is always bad. Everybody thinks a stock market crash is always bad. It's only bad for people who don't have cash. It's only bad for people who are overly levered. If you have cash and you're not over levered and you have access to cash, a recession is a very good thing because you get a tremendous opportunity to go buy a bunch of stuff that is priced at a much lower level. You can go to people who wouldn't have sold you something. When you went to go buy it the first time, they're like, I need a $1.2 million, right? And then you come back to them when they're in distress, when the money's dried up and the market's turned down, and you're like, okay, I can't give you 1.2 million, but how about I give you 800K? What do you think about that? Well, if they're desperate for money, a lot of times that's how assets get transferred at a price lower than what they're worth. That's how rich people get richer. They come along and they wait for you to have a difficult time. They wait for you to be financially desperate, and they're sitting on cash and they can come and buy that asset off you cheap. Or like when you have a house and you overpay for your house and you can barely make the mortgage payment. Well, there's a point where the bank wants you to default. The bank is like, we want you to default on your loan because we want that house. We can take that house, we can go sell it somewhere else and go make our profit, and you'll be the big loser, right? So just keep that in mind. When you think about these recessions are not always a bad thing. And there's a reason why sometimes, even when you can invest, you still choose to just hold on to your cash. So he says Stone has a good vantage point on the action since he runs the bi-monthly meetings of the Palm Beach Investment Research Group, a network of 35 family offices in Palm Beach, Florida. Let's see. He says the areas to invest are fewer, and there are a lot of money looking for those spaces. So they have extra money looking for a small number of investments, which tends to push the prices up, right? And so they're basically saying we're going to sit back and wait for the prices to go down. The view of the markets is shared by many of the 360 global single and multifamily offices reached for the 2019 UBS Family Office Report. Basically, he says about 42% of family offices around the world are raising cash reserves. Quote, there's more caution and fear of the public equity markets among ultra high net worth investors. So many of them are afraid of the stock market. They feel that the market is not going to serve them well, that there are going to be some problems. That has more people thinking about private investments, alternative investments, or cash. I agree. I think private investments and alternative investments provide the most opportunity, which basically means you have less money chasing those opportunities, which means the prices are going to be lower. Almost like saying, I don't want to shop at the trendy mall where everything's overpriced because everybody wants to buy everything in the store. I'm gonna go to the mall where people don't shop as much because they'll be a little bit more eager for my money. Does that make sense? I hope that makes sense. Give me a yes if that makes sense to you. Jeffrey Gunlack, Chief Investment Officer of Double Line Capital, said this month he thinks there's a 75% chance of a U.S. recession before the November 2020 presidential election, while the World Bank cut its 2019 global forecast to the lowest or slowest since the financial crisis a decade ago. More than 2/3 of European family offices surveyed think Brexit will hurt the UK over the long term. That is true. The UBS Camden report offers an insight into the discrete world of family offices, which manages the fortunes, tax affairs, and even lifestyles of the wealthy. Taxing the super rich has increasingly become a topic of discussion in North America ahead of next year's U.S. presidential election. Democratic candidates Elizabeth Warren and Bernie Sanders have proposed wealth taxes that may cost the nation's richest billions of dollars. Family offices have become a greater force in the global financial markets. Camden estimates that such firms manage around 5.9 trillion. The offices in the UBS survey had an average of 917 million under management. Investment results have been mixed for those responding to the questionnaire. Developed market equities were a big disappointment. Meaning developing markets like third world countries, things like that. Oh, sorry, scratch that. Developed markets like first world countries. The highest average gains, 6.2%, were for family offices in the Asia Pacific and emerging markets region. So emerging markets are like third world countries, stuff like that. So basically, I just wanted to share this with you. I don't think that all rich people necessarily always have this magical insight into what the economy is going to do, but they do know a few things. I think it's worth paying attention to. And also, a lot of recessions and downturns are actually self-fulfilling prophecies. If everybody believes there's going to be a recession, then there's going to be a recession. The recession isn't like something that's controlled by some external magical force like rain. Like if we all think it's going to rain, so that's not going to cause it to rain, right? But with a recession, it's almost like if we're married and we both believe we're going to have problems in our marriage, we both believe we're going to get a divorce, we both believe this ain't going to work out, then what's going to happen? If we're married and we both say, think to ourselves, this ain't going to work out, this ain't going to last, this ain't going to be no good, then what do you think is going to happen? What's your prediction for that marriage? Tell me, give me a guess. Nakia, David, Amanda, what do you think is going to happen in the marriage if we both believe that the marriage isn't going to last? We're going to get a divorce. It's not going to last. So basically, that's what a recession is. A recession, to some extent, in many cases, can be a manifestation of fear. It is when everyone has so much fear that nobody does business. The banks stop making loans. Companies stop hiring. Consumers stop spending. Because all trust is lost. And then what happens is there is a recession, there's a downturn. So is there going to be a recession? I think there could be. But the thing about a recession is that there's no expectation that the recession is going to last forever. Recessions happen and then they end, just like sometimes it rains and then it stops. Is the stock market going to crash? Absolutely, it always crashes. But it's never had a time where it's crashed and never recovered. So I share this information with you not to make you put you into an alarmist state, but to help you understand the dynamics of what's kind of going and how this sort of stuff sort of ebbs and flows, and also to encourage you to want to learn more and to also hopefully get you to want to educate your family. So what I'll do is I'll shout out a few resources we have in the Black Business School. We want to be the world leader in Black economic education, and we are deeply committed to it. We educate over 1 million people a week in Black communities all around the globe. We have students everywhere on every country in this planet that we can think of. And so if you're interested, go to theblackbusinessschool.com, that's theblackbusinessschool.com. You could talk to one of our specialists right now. They're waiting. We have a free membership option that you can start off with if your money's not right. And if you do decide to invest in a program, that's fine too. Take your time. And everything's refundable. The price is very, very low. It costs you less than a bucket of Popeye's chicken on a daily basis, which makes it far better than college because we have PhDs and lawyers, etc. In fact, attorney Nicole Compton, who's a business startup specialist, is going to do a Q&A this week on everything you need to know to get your business going. Julian Gordon, who graduated from Stanford, he's a real estate expert. He's going to do a Q&A on how to buy multifamily homes. Me, this week, I'm going to schedule a Q&A on stock market investing and things like that. And I have a whole stock market program with a vast curriculum that you can take a look at. So feel free to go to theblackbusinessschool.com, or if you want to actually check out some of my books, you can go to drboycebooks.com. Like here's one of them, Black American Money 3. But we have a lot of other stuff in place, so feel free to check that out. Last but not least, if you want to come to our seminar in New York, feel free to go to drboycenewyork.com. That's drboycenewyork.com. All right, guys, I'm out of here. Hit the thumbs up button, hit the share button. Also hit that notification bell if you are watching on YouTube, so that you'll be notified when we go live again. If you're on Facebook, please share this to your page. We would appreciate this very, very much if you can just hit that share button. That's it. There's nothing else to say. If you're on Facebook and you want to follow the Black Financial Channel, which is our daily news platform, financial news platform, feel free to go to theblackfinancialchannel.com. That's theblackfinancialchannel.com. So as you can see, we're in this, and this is what we do, and this is what I've been doing for years. I've taught, finance in China and 5 different universities, so I know this stuff pretty well, and I think I can help you out a lot. So take care, guys. Have a good day, and I'll see you soon. Be good. Peace.